Lovely to be here. My name is Emma Jones. It's been fascinating listening to the fireside chat and then the panel. I've started and sold two businesses, one to a UK public company and one to US private equity. And I keep on thinking when I hear these discussions, I think women are a great bet. And I'm always reminded there was, well, he's still alive, an amazing man called Muhammad Yunus, who started a bank, yes, lots of people know of this, called the Grameen Bank. And he lent microcredit starting in Bangladesh. The Grameen Bank is in lots of different places now. And he wrote a book about starting the Grameen Bank. And somebody, or he kind of starts off at the beginning of the book, where he said, I recognized that microcredit needed to be offered in my country to deliver economic development. And he said, people used to ask me, why didn't I lend money to both men and women? Because he only lent to women. So the Grameen Bank only lent to women. And he said, because when I lent money to men, they would spend it on alcohol and gambling. But when I gave the money to women, they would always pay me back. So I think women are a great bet who not only can raise money, but they tend to pay it back because they tend to deliver great results. So we're hopefully going to have great results from our little quick chat with, again, two brilliant panelists. We're pivoting back to finance. So we're going to talk about institutional finance, bank finance, and how to prepare for it. Again, you can read about Theo and my other lovely Louisa, she pronounces it better than me in the program. But what we're going to get into is how to apply, whether to apply. And Theo, I'd love for you to kick us off to give us an explanation of community development finance institutions. What are they and why should our audience of female founders get to know about them?
Yeah, definitely. Thank you, Emma. And hello, everyone, and everyone on the other side of the building. So CDFIs, Community Development Finance Institutions, are one lender in a lot of lenders in the loan debt finance space. Responsible Finance, the organization I'm from, is a membership body, so we represent around 50 CDFIs around the country. The way they're different is that they provide loans, but they also provide support, which takes the form of business advice, coaching, and signposting to other types of specialist advice to small businesses. I think what really drives CDFIs is the belief that small businesses are really a force for good. So I think all of you here today, you know, everything that you do, you create jobs, you create products and services that people love or, you know, can't live without. And we know that you contribute so much to your local communities and local economies. And as lenders, our sector fundamentally believes that funding is an enabler of what you do. So CDFIs, they take a different approach. So they take more of a relationship-based approach. And that means that they can say yes to a lot of small businesses that more algorithm and online lenders say no to. You know, as an example, last year, 95% of the businesses that our members lent to had already been declined by a bank or another lender. And actually 40% of the businesses that CDFIs lent to last year were led by women. And those are stats that we're very proud of. And I think also show for everyone here, if you've gotten a no before, if you've applied for finance before and you've gotten a no, it's okay. Don't get discouraged. There are other funders out there who take a different approach and will look at different sets of information.
It's interesting. I was at an event earlier today in a place called Ramsgate, Kent. Has anyone here ever been to Ramsgate? Oh, okay, good. Anyway, it was an event on how to open a shop because I'm involved with a community project which is trying to fill empty shops in Ramsgate with enterprising people and projects. And a lawyer was giving a talk on all the legalities to think about. And one of his top tips was speak to your bank manager. And as he read it out, I was like, who has a bank manager these days? But Theo, just to pick up on that point, because I was brought up by a mum who ran restaurants, and I will, again, never forget that when my mum wanted to open a new restaurant, she would go to the bank manager. He was called Alan Dodds. I still remember the name of this man, because she would come back and at the dinner table, we would all essentially thank the Lord for Alan Dodds that he'd given mum the loan to open another restaurant. So the bank manager was incredibly important. They don't exist anymore. But Theo, maybe just kind of tell us, because community development finance institutions are very rooted in the local community. So maybe give a sense of where are they and how does that local connection help when it comes to raising finance?
Yeah, absolutely. It's a really good point, because I think one of the things, like Emma said, you don't go to your local bank anymore. And in a lot of ways, that's a good thing, because we can get a lot more things done via mobile banking. But sometimes when you do have to make a big financial decision or a big financial decision for your business, you want to talk to someone face to face. And so I said we had 50 members around the country, and they are located in their local communities, and they employ people who live in the local communities. And I think it does really help, because the CDFI will come out and visit your business, get to know the management team, get to know how the business runs, what's some of the risks are. They'll know the local market. So, if you're starting a hairdresser, they'll know whether there's other hairdressers around and what the local competition might look like. And I think, for women-led businesses, we know that having that network and knowing where to go for funding can be one of the barriers for women accessing finance. And so having lenders in the community that are going out and proactive and are very approachable, is a big way to break down that barrier and get more funding into women-led businesses.
Amazing. Thank you. Louisa, we'd love to hear from you on the practicalities. So say Theo has just encouraged everyone to apply to their local community development finance institution. Share with us your top tips on how you practically prepare for that.
Well, thank you for inviting me. I'm very excited to be here in this panel. Normally, I talk about the other sources of funding, the equity, but I'm delighted to be talking on these debt-like sources. And yeah, I wanna, because I can tell you where the sources are, but that is easier these days with ChatGPT. Just ask the question, define what you are. You say, look, I'm looking for funding for an entrepreneur. My business is this. These are my revenues. Where can I find funding for that? That is easy these days. But I want to talk a little bit about some of the practicalities, as you were asking, which is basic finance knowledge. And sometimes women, we are scared to ask, or we don't know much about finance because it's something, in some families, the women were left out of finance because it's like, this is for men type of thing. And first thing is understand your financial needs. How much money you need and when. Sometimes you need a lot of money in Christmas, sometimes you need a lot of money in some part of the year, the rest is all okay. So how do you approach that financial cash need that you might have, in certain moments in time? The other thing is separate clearly expenses from investments. Clearly understand what is an investment, what you need to buy an asset, for example, from your day-to-day expenses, because going to the bank for, if you need to buy an asset, there are sources of capital in any financial institution that is easier if it's asset-based. So that is, you say, okay, I need, I don't know, 100,000 K, how much you need for this asset, how much is expenses, separate the needs. And the other important point is also to decide what are you gonna do with your working capital. Not sure if I'm boring you with a lot of details, but working capital, fundamental. If you have products, and I think Mireia was talking about the lucky moment that week when suddenly everybody wants something and you don't have it, and you have to anticipate money so that your suppliers start producing it, and you are not, maybe you were getting paid because it was a pre-order, so that's the good thing. Working capital, can you get paid in advance? So then you can pay your suppliers maybe a little bit later. So how the money comes, when it comes, is super irrelevant to understand. If your business is growing fast, super careful with this understanding, like go to ChatGPT, use whatever you like, understand your working capital. Sometimes you might actually find that by changing your business model a little, your working capital changes a lot, and then suddenly you don't need so much money. Just very basic example, but if your customers are business, they normally don't pay you. As you know, they take a month, 2 months, 3 months. If your customer is a hospital or the government or a university, good luck. Sometimes good luck. Now, can you start selling to other people that maybe small businesses that maybe pay better, or maybe to consumers that pay you on the spot, or can you have some pre-orders that change a lot the situation? So these are some of the things on your day-to-day. Another important thing, have your papers ready, because any institution, bank, or any other financial institution are going to ask for your, financial statements, maybe audited or not account, taxes. So have them ready. Don't go to talk to them if the documents are not ready, because, it's like you are approaching somebody for a job, they are going to ask for a CV. So prepare your CV before you approach them. So this is kind of, and I stop there maybe.
No, well, I'd love to do a follow-up onto that, because Louisa, risk was mentioned on the panel a couple of times. And one of the things I'm super keen, the UK is a very big leader in what's called open finance, and Theo's all across this. And one thing I'm keen to see is if a woman has a bank account and the bank can see transaction and performance data, could the bank approach electronically or even by a human and say to the female founder, you are eligible for a loan? So rather than a woman having to think, oh, should I take on debt? Would I have a loan? If you are told, actually, we can see from your transaction data, you are eligible for a loan. Do you think that would increase the number of female founders who are applying? And connected to that, do you think that female founders can de-risk their decision to borrow money if they do the calculations to say, well, if I get, and this was mentioned before, if I get money in, I can grow further and that will enable me to pay it back?
Yeah, about the bank telling you that you are eligible for a loan, I always get that when my bank account is full of money, so I don't know if it's working or not. Sorry, but I think what she was saying, they give you money when you don't need it. They give you the umbrella when it's sunny outside, So I think it will be great to if the banks will be approaching female founders, or everybody is saying, look, I have looked at the accounts and I see, that you are stable. Sometimes you have these peaks and you need more cash, and I'm happy to support you. That would be amazing, really. And I think maybe there is a lot of opportunity for challenger banks or other more creative financial institutions for this. But yeah, I mean, I think losing that fear, and here is fearless, of understanding finance, the same way that maybe you understand your customers and you understand marketing, but understand your numbers. Don't be scared of the numbers. It's fundamental.
Lovely. And connected to that, Theo, during COVID, of course, lots of businesses got bounce back loans from their traditional banks and also kind of the more modern banks. That can lead to some businesses being put off getting future debt. They maybe didn't have a good experience. They don't want to get into more debt. How do CDFIs deal with businesses who come to them with the perception of, I'm not quite sure I want to get myself into a debt situation?
Yeah, it's a really good question. And I think it's something we see a lot, and I think particularly from women-led businesses. And I think there's, I mean, the first thing is I think we call it debt, which isn't a particularly positive word when you think about being in debt. And the reality is, I think, as we talked about, loans and finance generally can be a really positive thing, and loans are, for the most part, are very affordable, an affordable way to grow a business or stabilize a business. So I think there's, the perception of that. There's maybe fear of being turned down and told no. There's maybe a fear of what happens if, I don't do so well one month and I miss a payment. What happens then? And then I think there is a challenge around how do you navigate the whole thing, because there are a lot of different products, as Louisa alluded to, around the different stages of a business's journey and what you're using the funding for. So I think all of those play into the fear a little bit. And what do CDFIs do? I think there's a few things. And I think one thing is, it's not related to CDFIs, but if anyone here is thinking about funding, I think the British Business Bank's website is a really good starting point. They have a lot of impartial information. I think that's a really good, just, impartial source of information, both about equity and debt. then I think the second thing is the CDFI approach is to take a more relationship-based approach, is to, I think, work like a partner. CDFIs believe in their customers. They want them to succeed. And I think the more transparent the business can be, the more information that they share, I think the faster they can get to a decision. And I think the last thing I would say is it can sometimes, I think, maybe the fear and the approach women take around perhaps, I think like Sarah said at the beginning, highlighting some of the risks more can be used to women's advantage. So I was talking to one of our members yesterday preparing for this, and I asked her, do women, are they more risk averse? Are they more reticent to take on loans? And she said, actually, this is a generalization, but actually, when a woman-led business approaches a CDFI, often they're like, well, I have this issue, and these are the risks I see, and this is what I'm really worried about. And for a CDFI, that's gold dust. They love it because it helps them as a lender. Number one, it shows them that they really understand their business, but number two, that it helps them understand where the business is on its journey and what they need with this funding and how the funding will help them. So I think that's another thing around, well, flipping it on its head, that fear can maybe be an advantage, and it's really good to be transparent like that with your funder and your lender.
Love that. Theo mentioned British Business Bank. Startup loans is also a great thing to have a look at, which is delivered. But there were lots of nodding heads when you mentioned British Business Bank. So I'm guessing we've got a very savvy audience who know all about it. Louise, my final question is to you, which is, what do you feel are the prospects for the future funding landscape for female founders?
I'm very positive. I'm very optimistic because I see more and more women everywhere. I was just before coming, I was teaching a program that is called Newton Venture Program, which is a program that we launched to train the next generation of venture capitalists, or, to bring diversity to the venture ecosystem. And I mean, you can see that the diversity is there, and this is like you're seeding. But then, these diverse investors will bring, more entrepreneurs, diverse in the, and I think this is also happening in all the new financial institutions that we see. Women are everywhere as well, so, or diversity in general. It's not only, I think, I like to talk about diversity, and I'm very optimistic. I think things are changing. I think that the access that we have today to information is there. It's just there. So it's not about that you need to go to a library. Like, I think, Mireia, was funny because I can imagine, I only have 2 kids, but I was understanding, I tried to negotiate, and I also put the Excel, but then I finally got divorced because he said, no way. So he left, and he's in Barcelona, I'm here in the UK, but yeah. Then I told the children, you have to do a lot of work now because your father is gone. So anyway, but yeah, I think that things are changing, and now nobody's going to stop us. And it's, even if you didn't have the opportunity maybe to study or to do other things, I mean, maybe you don't want to ask to the brand manager because it's a man, and you don't want to show that you don't know, but ChatGPT, you don't care. You just ask whatever, you just get the answer. So I encourage everybody that doesn't have the knowledge, go and learn. Don't be shy. There is all these online resources these days, and between changing diapers and, preparing coffee or whatever, you can be, maybe instead of spending in other things that in social media are fun, but maybe not so fun, but learn, use your free time to learn, and don't be scared of asking questions to anyone.
Beautiful. You heard it here. Positivity. That's what we love in these days when everyone's waking up and seeing global news. We want a bit of positivity. Ladies and gentlemen, please join me in thanking the beautiful panelists, Louisa and Theo.